Hello and welcome back to South Bank Live, episode 30 no less, How Time Flies. My name is Boaz. Thank you to all who have joined us this evening for the latest episode of South Bank Live. And I'm joined today by John Butler. John, how are you getting on this evening?
Oh, very well, thank you. How about you?
Not bad, not bad. Still in Derbyshire at the minute, very, very bonny area of the country. And yeah, it's been very interesting exploring this place. I do move around a little bit while the lockdowns or the threat of lockdowns are still around, and yeah, it's been nice exploring England a little bit. But yeah, thank you to all who have joined us this evening. It's great to do these shows on a live setting, so we can engage a bit more with our viewership and our readership at South Bank Investment Research. And this week we have quite a few things we should be discussing. There's a lot of energy stuff in there, but there's a few other curveballs as well. If you're watching a recording of this, or indeed if you're just watching live, if you could like the video, if you do like it, and subscribe, it does help us very much. So please do that if you do enjoy this kind of content. But just to start us off, John, I remember a while back, it was many episodes ago, some of our consistent viewers will likely remember it. You made the prediction that we were going to face a winter of discontent. And here we are, and we've got discussions on. We could just start off with this headline regarding the national grid and the rationing of energy, which is not something that it's something that you wouldn't really have anticipated. I think if you'd asked the average man a while ago, is energy in this country just going to get rationed? It's probably not something that they would have said, yeah, that's definitely in our future. And yet here we are, and energy rationing is on the way. Yeah, I think there is an article from the Telegraph regarding this, and it's quite an odd thing to see on the paper. National Grid scheme to ration households' power use at peak times. Well, up to 1.4 million families have been offered a trial aimed at preventing blackouts as Britain prepares for the Green Revolution. Very, very interesting topic indeed. John, could you expand a bit on what the winter of discontent thesis was and how we've gotten there?
Well, the term was coined in the 1970s, I believe, when you did have a sort of a generally slow burning, but occasionally fast burning economic crisis that went on for years. And one aspect of that crisis was a combination of factors, in some cases related to the closing of the coal pits, and in some cases resulting from the devaluations of sterling. And you could argue government economic policies that both contributed to those and didn't necessarily respond to those, perhaps in the best possible way. The net result was that the energy capacity of the country was compromised. And so you read a headline like that, and people who are old enough to remember these things will think, "Oh my God! I mean, this reminds me of my youth." And after all this time, have we really gone back to this? I mean, are we really regressing back to what was a pretty dark time in the country's history when you consider that it was peaceful, right? I mean, it's arguably one of the worst peacetime periods the country's ever had. So anyway, here we are again. And yet you could have sort of seen this coming. Now, I'm a little surprised how fast it's coming. But that it was maybe going to happen, as you say, I was already speculating about this. The fact is, we've had all of these negative supply shocks. Those negatives, and a lot of it's due to lockdown, but there are some other issues involved here. And the whole energy situation specifically, look, we've seen attempts in this country to try and wean the country off fossil fuel, which, some people were touting with all kinds of success, but then occasionally you have a period of, there's not enough wind, or the wind's coming from the wrong direction, or it's super cold in Europe and there's not enough gas around. Oh, gee, Russia's now withholding supplies. We had the transmission cable from France's EDF, one of the biggest suppliers to the UK. We had that transformer station down in Kent go offline. I mean, whatever. You could say it was a perfect storm, and yet, here we are. You could argue now that we've been underinvesting in energy infrastructure for years, or simply malinvesting in the wrong kind of energy infrastructure for years. And so here we are. It really is starting to look like a historical echo of the winter of discontent of the 1970s.
Yeah, it's not a very happy state of affairs, is it? But all credit to you, John. You did call it very very well. It's not just the energy rationing that we shall be discussing this evening. There are a few other aspects that you could relate back to the 1970s. Oil is very strong at the minute, looking at $90 at Brent, and looks pretty firm there. And some of the hatred towards oil, I feel, has cooled off a little bit. We do have some great comments in the chat. Good evening to everybody. Hello to Andrew and Phil. As always, looking forward to this evening's podcast. Well, welcome, Phil. It's great to have you here from Kingston upon Hull, and David as well. Good evening indeed. Now we do have a couple of comments, John, that you're not wearing a scarf this evening. And some people do hope that you haven't caved in to peer pressure here, with some people saying that you shouldn't be wearing a scarf. That's from Seamus and from David. Is it warm enough over there, or are you afraid that you're being judged for your fashion choices?
Well, it is a fairly mild day when you consider it's early February. That said, I am wearing a slightly thicker jumper than normal, and I guess I just felt that a scarf was, just a bit unnecessary at this point. So.
Seamus was hoping for a Biggles flying helmet and goggles, but I think we'll have to wait for maybe episode 50 or further down the South Bank Live, and maybe we can break those out. Not many people read Biggles books these days, but they are a gem of English literature. And we also have indeed David remembers the Winter of Discontent, which was not a great
Wow.
time. We do have. It's one of those things where so many young investors don't remember inflation. There was a comment I was seeing in the crypto Twitter space today, because there are so many young people, and somebody was sort of pondering aloud. When was the last time? How many people in the cryptoverse remember inflation? And the only person that sort of came to mind was Mike Novogratz, and it's very very young. People don't know what this pressure is, or they don't have experience with it, and as a result, they could get caught very much off guard when it comes to their investments. On that note, John, of course, just today we've got the 7.5% inflation print over in the US, and that's what they'll allow you to think is the inflation rate. Pretty high, huh?
Well, I mean, it is yet another upside surprise. And the fact is, economists keep getting this wrong. It's not just the central bank itself that never said this was going to happen, right? But the mainstream economics profession, which is supposed to try and stay ahead of this, and you'd like to think, or at least a little bit skeptical of central bank predictions, they're still trailing what's actually happening. And it makes you wonder whether their models are flawed. And indeed, as I've argued before, yes, their models are flawed. The fact is, they don't have good ways to account for the sorts of qualitative supply shocks that we have seen during and coming out of all of these COVID lockdowns. Look, macroeconomists nowadays, they're trained to work with time series analysis, quantitative analysis, not qualitative. They find it very, very difficult to make qualitative adjustments. They don't like that because they feel they're guessing. They feel it's like, oh, but we don't have a data set for that. Well, sorry, if you don't have a data set for that, you're going to have to try something. And I think that's part of what's happening here. They're sticking to the same models they had, and they're failing to capture what's going on. So that helps to explain why they just keep missing the target. But look, 7.5%, huge number. Yes, it raises eyebrows. It's not just food and energy. It's looking more and more like the core elements of CPI are also being affected. And as you say, many people believe that the official CPI in the US, and this is true of some other countries, they believe it underestimates what a fair, true figure would be, in part because some things that are hard to capture, such as housing. I will just offer this. Every time they have revised the CPI calculation methodology in the United States, it has always, without exception,
I've been
led
down.
to a lower revision. It's always gone down. How convenient, to the extent that a central bank, a government, and of course, all the index-linked pensions, insurance policies, whatever it might be, how convenient that these nominal obligations end up rising at a slower rate than they did prior to this newer, better methodology. It's only ever gone in one direction, and it makes me wonder sometimes.
Yeah, it tells you all you need to know. Not once have they ever made an adjustment to inflation that's led to a higher figure. Not once have they said,
Not
"Oh,
once.
actually, the cost of living has gone up more than we thought it was." And of course, the man on the street does know, of course, when when the cost of things are going up and up. We do have some interesting comments here in the chat. And from John. John James says, finally made it to another of the live episodes. It always is better to watch it live, and he's looking forward to the session. Well, John, it's great to have you here, and I hope it will be a very good session indeed. Michael comments, the issue is a shift to overdependence on renewables in the energy space, which don't turn on quickly when you need it. It's absolutely required that we get lots of nuclear for a green future and not just solar and prayers. Well, very interesting comment there, Michael. What would you say there, John? Because I think that's broadly in line with many of the things you've said on the state of green energy and the fossil fuel space.
Well, I mean, look, I've been following this trend for a while, and as it became clear that sadly, both wind and solar have consistently failed to achieve their promised objectives. And yes, under ideal conditions, they can work quite well, but under real world conditions, they just never met with the hype. And I think people are starting to figure that out now. And so what you're seeing is a big pivot towards nuclear again, saying, okay, look, if we're convinced that the real enemy is carbon, then nuclear is the way to go. It produces effectively zero carbon energy. Now, there is carbon involved in building the plants in the first place. But once the thing is operational, it operates in an essentially zero carbon way. Now, that may sound great if you think carbon's the problem. But if you think more big picture and are concerned about possible issues with radioactivity down the line, then you start to wonder. And as I do believe I mentioned in one of my commentaries from roughly a year ago when I was talking about this, I said that, look, yes, nuclear is low or even zero carbon, but to call it green is a bit of a stretch. The fact is, one of the byproducts of nuclear power generation is plutonium. And plutonium happens to be the most toxic substance in the known universe. Calling that green is a real stretch of the definition of green. And so it's interesting to see these supposedly, very environmentally aware EU bureaucrats now pushing nuclear as the green future. How convenient, given that nothing else appears to be working.
Quite. Maybe it's, as plutonium and other radioactive substances are often portrayed in graphic form as being, bright green, radioactive green as a shade. Maybe that's got something to do with it. We do have a comment here from PF, who says, I remember 15% inflation and grew up with armed Vulcan bombers with engines running 24 hours a day, just in case. Yet another interesting edge of the winter of discontent. Of course, you've got the Cold War raging in the background. I would actually say one of the good parts of the winter of discontent, having never experienced it, of course, would be the Vulcan bomber, as it is such a very fine aircraft, much nicer than the B-52s you guys have got, John, over in the States. The Vulcan was a very bonny aircraft, though sadly, of course, completely discontinued. Interesting on the, when we're making these big allusions to the 1970s and roaring energy costs, there were a couple of aspects of this that I'd like to dwell on, a couple of headlines that I saw this week that I think could tie in quite well with it. And this comes back to the death of oil that people were talking about so much in 2020 and a little bit in 2021, when everyone was going very full on with the green energy, narrative, as it were. Yeah, a couple of headlines. I think this was on. There was one on BP. There was another one that was regarding oil fields. So there's one with I think 6 new oil fields in the North Sea. Yeah, it's from Daily Business. 6 oil fields poised to go ahead in the North Sea. Very good for Aberdeen, where I'm from. Though everyone else will, of course, be talking about this in a very negative way because it's all about fossil fuels. But very good for Aberdeen, which is always a good bit in my book. And there's another one regarding BP. So BP had an absolutely terrible year last year, terrible 2021, and yet it has now had its biggest profit in 8 years this year. So it got absolutely destroyed during lockdowns. But this year it's got really, really good profits, and suddenly everyone wants to tax it because it's this dark energy which we need to be getting rid of and replacing it with green things, and everyone wants to tax this, and then reinvest it in renewables. What would be your take on that, John? Do you think that's actually going to go ahead? Do you think while oil is very richly valued at the minute, and I imagine it will continue to do so, or maybe even do better. I believe six-digit, no, not six-digit oil. Sorry, that's a little too optimistic. I believe three-digit oil is easily achievable in the near future. But do you think that while the high energy prices and the energy rationing is pointing to the fact that we don't have an abundance of energy, it's going to stop government policies where they start taxing the few cheaper sources of energy?
Well, you can't. I mean, you can't have one of these disconnects where the left hand doesn't know what the right hand is doing. I mean, if you're opening new oil fields because you're trying to deal with what is what has become an energy crisis, and it will get worse before it gets better. You don't fix these things quickly. So if you want to try to sort that out, of course you have to encourage investment in new production capacity. And how do you encourage new production and investment capacity? By slapping a windfall tax on one of your biggest producers. Why invest in new production capacity if you know that every time you have a profitable year, they're going to whack you with a windfall tax? See, the thing is, what makes good politics doesn't make good economics. There are some businesses, and upstream oil is one of them. And by upstream, I mean getting the stuff out of the ground. The stuff that happens after that, they tend to be more stable margin businesses. The really volatile part of the oil industry is exploration and development of new fields, and then the production from those fields out of the ground. Okay, so this upstream part of the business is where the most volatility in profits is. However, who's going to invest in a volatile business that might only be profitable 1 year in 5, 1 year in 7, 1 year in 10, given all the volatility? Who's going to invest in that sort of business and develop new oil fields and take the risks of that if you know that if you get lucky, you're just going to get hit by a windfall tax? You won't do it. And
Yeah,
you
exactly.
end up with chronic underinvestment in what happens to be a pretty damn vital input to life as you know it. And then, of course, the politician that oversaw the misguided windfall tax 5 years later, everyone's saying, why do we have a shortage of oil? And they say, oh, gee, gosh, well, I guess the oil companies underinvested. Who knows why? Well, guess why? So this is the situation we're in. And BP's case here is absolutely the correct economic one. Do not hit us with a windfall tax, because you're just going to prevent us doing what now appears to be absolutely necessary to get through any planned energy transition. We need fossil capacity for longer than we thought, because all the green stuff isn't working as well as we thought. And if you don't let us, get in there and develop new fields, it's only going to get worse from here.
Yeah. On the note of oil and energy price in general being short and being very, very richly valued, this, of course, is a big part of the inflation calculation when it comes to coming out with these inflation statistics. And if we are in a thoroughly inflationary environment, and it's not all transitory, as they were saying over the past 18 months, one does have to wonder what the inflation is now going to do to the economy. And there is a good question from Apple, who says, hello, Boaz and John, enjoy your beer. Thank you very much, Apple. Despite having inflation for the foreseeable future, could there be a recession/depression down the line? Which I think is a very good question, because ultimately, central bankers have been trying to create inflation for so long, over the past 10 years, and even for longer than that. And it's always been put as, this is a good thing for the economy. Well, now it's here. Is it going to be a good thing for the economy, John?
Look, I mean, inflation causes all sorts of problems. The reason why we don't worry about it, or we haven't worried about it so much in recent years, is first of all, because it was relatively low in a historical comparison. And second of all, I mean, again, the mainstream economics profession, they just don't like modeling things like supply shocks. They don't like modeling things that occur only once in a blue moon, that are more qualitative in nature. And so that's kind of what this type of inflation is. It's the mix of all this monetary largesse and fiscal largesse that's been thrown at economies generally since 2008, but which never got a whole lot of traction in broader economic demand. But now you've got these negative supply shocks combined with all that liquidity that's still sloshing around out there. And so you get a huge spike in inflation. And again, that's the recipe that I sort of saw coming over a year ago. And sure enough, here we are. So in any event, it is very bad for an economy. What it does is it distorts economic calculation. It makes sensible investment decisions more difficult. No one knows where prices are going to be in 1, 2, 3, 5 years' time. How do businesses plan? What was a low-risk enterprise becomes a higher-risk enterprise. What was already going to be a high-risk enterprise becomes prohibitively risky, and your investors pull their funds and decide to do something less risky instead. What that means is that the capital stock is not going to evolve and grow at an advanced rate. Rather, you're going to stagnate. And God forbid people get so nervous about the future, they don't even invest enough to maintain the existing capital stock. And then you get into a proper economic depression, which is, of course, by definition, a negative supply shock because your capital is shrinking in size. And that is therefore an inflationary depression. That is the worst of all possible worlds. It did happen at times and in places during the 1920s and 30s. And it was properly devastating, led to the rise of populism big time, and made a lot of people's lives miserable to the point of just unbelievably bad. I
Yeah.
really hope we're not going there.
Certainly, I would I be right in thinking that Venezuela would be an extreme example, but an example of that dynamic again, where the capital stock erodes. So all of the oil production, which would actually be great in an inflationary environment, can't be taken online because it's just been allowed to rot, and this then, as you say, creates a negative supply shock.
It's a great example because Venezuela has huge oil reserves, but it's relatively sour crude. And what
Yeah,
that means is that all of the stuff you use to get that crude out of the ground, get it to the refinery, refine it, and so on, has to be done with care, has to be done with the right kind of equipment. The equipment has to be maintained in the right way. And if you don't do that, you're not going to be able to sustain production, at least not in an economic way. And so here you go, right? Citgo, which is the national Venezuelan oil company. I mean, they used to have a pretty well run operation, but as the years went by, due to cutbacks this and shortcuts that and everything else, just it got worse and worse and worse. And of course, that is so important to their economy. So yes, it is a good example, but I'm sure many industries in Venezuela, not just the oil industry, were underinvested for political reasons. In order to fund, whatever new welfare program one of the leaders was trying to get through Parliament or whatever it was, and so here you are, right? What should be a wealthy country, at least moderately wealthy in per capita terms, has been just made destitute through malinvestment and underinvestment.
yeah, it's quite a tragic case indeed. I believe it's the largest proven oil reserves in the world. But as you say, John, it's quite heavy as well. I don't think it's just
Yeah,
sour; it's heavy sour stuff. So it's
yeah.
got it is literally heavy, and there's lots of sulfur in it, which makes it, it's actually very useful if you're mixing it with lighter versions of crude. But as you say, you can't. It takes an awful lot of refining to get it into good shape. Very sad case in Venezuela. Interestingly, you don't hear. There was a time in 2019 where there were loads and loads of news articles about what was going on in Venezuela, how bad it was, and there was lots of pressure on regime change over there. And then that kind of evaporated, which I find quite interesting. It makes you wonder why these media narratives arose, and what was driving that, and why it kind of evaporated away in 2020. Though, of course, it was the pandemic. I thought that the pandemic would actually, be the sort of the straw that broke the camel's back. Not even the straw. I mean, it's pretty damn heavy straw if it is in Venezuela. But of course, I've been proven wrong. But what do I know? I've never been to Venezuela, so I'll stay away from making further predictions on it. A lot of great questions here in the chat. Hopefully, we can address quite a few of these. A very interesting question regarding inflation and what it does to government finances here. This is from Stephen, who says, in the UK, the annual pension cost is 103 billion a year. If inflation runs at 7%, then how will the government find the extra cash if employers hold down wages? More taxes, making the squeeze even worse. In terms of phrasing that as a question, how will the government find the extra cash to get started with, John?
I mean, you just issue more debt and you hope that the Bank of England continues to hold real interest rates at a negative level. So the real cost of servicing that debt remains low enough such that it doesn't result in a debt crisis. I mean, the thing is that this has been going on for a long time, right? And it's not just the UK. Pretty much every welfare state in the world, there are a couple exceptions to this, but pretty much every welfare state in the world has steadily accumulated debt through through one economic cycle after another. And they do that in order to, close these pension gaps when they need to, or whatever gap it happens to be. And the UK is no exception to that. And I frequently say to people who think that maybe I'm, a bit of a, I don't know, a bit conservative, a bit, not sympathetic and not willing to understand the plight of people who might depend on various aspects of the welfare state. And I always go right back to them and I say, look, I have nothing against a welfare state, but someday you have to find a way to pay for it. And I see no evidence that most countries, again, there are a couple exceptions to this, but I see no evidence that most countries have found a way to pay for it. Simply running up more debt every time you have to plug the gap is not sustainable.
Yeah, it does feel like the government is just going to keep on digging however it can. We were referring earlier to understating inflation statistics, which a couple of commenters have pointed out would help the problem of paying out inflation-linked pensions. And this is from Robert giving a contrary opinion here. Or, well, it's not really so much a contrary opinion, but a very interesting view here. Hello, lads. I loved high inflation. The interest rate at the Nationwide was great. Now I get more interest in a DeFi setup, just as well as they'll still keep rates low by diktat. It's a very interesting observation. Inflation as a force, it definitely has. There are some people that it destroys, and there's some people that it destroys slightly less, and there are some people you can use it very opportunistically to make an awful lot of money. Back in the 1970s, I understand a lot of young folks, because they were young and they could change careers and they could move through the labor force, laterally quite easily, would, if you weren't getting a pay rise very regularly, well, you can just change to a different line of work. Whereas if you're older, obviously it's much harder to do that kind of thing. And as a result, if you're getting, you're managing to get decent compound interest that's maybe keeping up with inflation at the bank, because interest rates were high, or they were eventually raised a lot. You could use that to build up some savings and then get a mortgage. Property prices were a lot lower in the 70s despite the inflation, and the inflation would destroy the mortgage, and you'd be left with a house that was appreciating in value very well. And lots of people became property speculators during this period. John, do you think there's something in that idea again if this inflation that we have now does persist? Because house prices are already bloody expensive in this country. And it makes me wonder whether or not the same trade can be executed again, or if the situation is just completely different.
Well, as it stands now, right, if the Bank of England continues to allow real interest rates to remain negative due to this rise in high inflation rates, then there's nothing to stop house prices continuing to go up. It's only when inflation does become a political problem, that is, when enough groups within the economy, in particular the working middle class, when they start to think, wait a minute, we are not benefiting from this, right? Our cost of living is going up, and yet our after-tax wages are not. Then it becomes a political issue, and then at some point, there'll be enough pressure to tighten the screws and to try to get inflation under control. Now, when that happens, and when interest rates go up sufficiently, real interest rates back into positive territory, then house prices will level off and or outright decline. I suspect the Bank of England would never want an outright decline for reasons of potentially causing another financial crisis, but they might be willing to try and fine-tune their policy to at least kind of get us into, say, a sideways environment for house prices. If in that environment, wages do continue to rise due to the inflation, then you get this closing of the gap. That is the income gap vis-a-vis house prices, how many years of income, say, it takes to buy a home. Now, back in the 70s and 80s, when you had very high interest rates, it was perfectly normal to be able to purchase a home with, say, 3 to 5 years of wages. And so as long as you were able to afford the interest payments in the meantime, you could buy a house. Whereas nowadays, depending on where you live, it can be 10 times or more what you can take home.
Yeah.
And that's just prohibitive, right, for most people. And so that gap someday will close. It has to. Economically, it can't stay that. You can't price the bulk of the population out of housing affordability for a sustained period of time. It just doesn't work. Okay, it doesn't work politically, and is actually bad economically, because what it does is it leads to further maldistribution of resources, because there is an implicit benefit to an economy when people own their own assets. They tend to take better care of them. If you get into a situation where everybody in the whole country is renting, basically, the capital stock, the housing capital stock, will not be maintained as well, other factors equal. People just take much better care of their own stuff. And that's true of anything, not just your home.
Right, right. I mean, I don't know, John. I think the government is doing their best shot at continuing the unsustainability aspect of this when it comes to house prices and making sure that houses don't get sold, pay for care and things like that. A lot of very interesting comments here in the chat. That question from Robert was very good on high inflation, or the comment on high inflation. And then speaking around DeFi with decentralized finance and how some people are harnessing decentralized finance and what the kind of yields that you can get out of that as an inflation hedge. But ultimately, in DeFi, it's not the same as having money in a bank account. You are putting money into a smart contract, and you're effectively a market maker. I mean, you are it's automated market making, and you're putting capital over there in maybe sort of a stable coin, a stable swap setup. So, say Tether to USDC. These are two stable coins, and you are going to try and make yield from making a market from people swapping one to the other. And you can actually get some quite high interest rates off that. I was looking at a liquidity pool in the Solana ecosystem, and there's this thing you get called wrapped UST, which is a stable coin in the Terra ecosystem, and it was in a pool with I think it was with USDC, so it was with Circle, the Circle stable coin. And overall, if you did put money into that and the interest rates, the activity remained the same over a year, you could get a projected APR of over 8%, which, if inflation is 7.5% over in the States, that sounds pretty good. Thing is, it's completely different than having your money in a bank account. And there are so many other caveats to that in the DeFi space. So while it is this brave new world, and it is, in a way, it is better than sort of brave new world, this is an attempt to break free from so many of the financial constraints that we've got. There are so many other risks with that when it comes to using DeFi, and it has its own. You really need to know what you're doing a lot of the time, as otherwise there are mistakes that can be made and things like that. But very good comment there, Robert, on why why you love high inflation. On the topic of inflation and oil and things like that, Mina asks, "What is the future of oil? The renewable agenda dislike it." And just as a general comment, John, what is the future of oil? It's a very big question. So maybe don't go too deep into the weeds with it.
Okay.
But what would you say?
Well, first of all, I mean, this idea that we're running out of oil, I mean, that is true in an absolute sense. There's only so much of it in the earth. That said, there's actually a hell of a lot more than is generally assumed. This idea that it's running out, tomorrow, next year, next decade, is absolutely not true. And indeed, when you dig deep into the academic debate here, the science is not settled at all, as it were. And there are some people who actually believe in the so-called abiotic theory of oil, which is that it's not just surface biomass that went through plate tectonics, subduction back inside the earth, where over millions of years became crude oil. So you're taking what was effectively organic matter that grew with the force of the sun, ends up going into the earth, mixes with stuff in the earth under great pressure, becomes crude oil, and then it bubbles back up when you poke a hole in the ground. Okay. But some people actually believe there are forces within the earth itself that create oil. Now, I'm not saying I ascribe to that theory. I'm just saying that there are disputes, a lot of disputes in the geological, geophysical profession regarding precisely how oil is made in the earth, and precisely how much there is. Okay. What we do know, however, of course, is that there's no way to transition away from it quickly. And we're kind of learning that the hard way, right? This is where we started this discussion tonight. So what is the future of oil? I would say this. I would say for the foreseeable future, the world is going to remain hugely dependent on oil, in particular for transportation, perhaps less so for power generation, but hugely dependent for transportation. And I just don't see a way to easily transition away from that. Okay, so if that's the case, the really important thing here is simply that we become more efficient. We should use the oil we do have, we do produce more efficiently. And that to me is something that in my experience anyway, markets do pretty well when left to themselves. They tend to allocate resources pretty efficiently when left to themselves. So let's consider, the ways in which oil production is subsidized. Let's consider the way in which oil production is taxed. There's so much regulation, so much interference. Every country seems to come up with its own set of rules regarding precisely how all of this should be done. And I actually think the more you deregulate the oil industry, don't get me wrong, protect the environment, make sure it's not being done in the way that causes negative environmental externalities, but kind of let explorers get on with it. Let people looking for better ways to produce and refine oil get on with it. And let's also continue to produce more efficient vehicles. I mean, the fact is that very, very small cars that are still petrol cars, if you make them very small and very light, not some big heavy Chelsea tractor, right? But just a small light car, you can pretty much get, I believe now, something like 25 miles per liter. It's something like it's pretty high. It's pretty high, and those sorts of vehicles perhaps would be more popular if people knew that, right? If they actually knew just how efficient petrol cars can be when they're designed properly.
Yeah, it's an interesting aspect of that. When people think of the future, they're always thinking. Well, it's not always. I mean, you can't say always, I suppose. But when you see these visions of the future, it's always a renewable one, and where electric vehicles have just managed. The battery issue has evaporated somehow. The technology has made the leap one way or another, and everything's batteries now. We've got really, really long range, really high duration batteries, and it's all good. But people don't think so much about making hydrocarbons last a lot longer with less emissions quite so much, which is maybe, I guess it's less exciting to think about the future in that way because people want a radical change. But
but you've got to look at the numbers as they are. Okay, so let's talk about batteries. Let's talk about battery powered cars. All right, so not only do you have to build them, and that means you have to do all the cobalt and lithium mining and everything else, which is hugely energy intensive and cannot be done without fossil fuel input. Okay, it's just not possible. Then, of course, you have to charge the battery, which means you need power plants, and those power plants are going to have to generate electricity somehow. And when they do generate that electricity, and they then transmit it through wires, there's going to be a lot of loss, right? No matter all that high voltage transmission suffers losses, especially over long distance. Then, of course, you charge the battery, and the battery itself is not perfect. It kind of leaks, as it were, some of the energy. And then, of course, the battery powers the car. Okay, but if you add up all the losses in that chain, all the net losses of the energy that went into the start of it and then came out the end, it's unbelievable how much is lost. Whereas when you have a petrol motor and you're burning the fuel at source right then and there in your internal combustion engine, the net loss is actually extremely low. Modern engines are incredibly efficient, and I forget precisely how high, but something like you get something like 80% out of what goes in. Whereas in the battery world, I think it's like a tenth. It's not even close when you really add up all the numbers. Don't get me wrong, we've come a long way and there's a lot farther to go, but we're just nowhere near battery tech being as big picture efficient in power terms as just burning your petrol at source to power your car.
Yeah, unless you're spilling an awful lot of that petrol somehow inside your car, they are very, very energy efficient. And indeed, with modern technology, modern engines, they have managed to make them get an awful lot of bang for your buck. Whereas electric vehicles are still somewhat further behind. Though, of course, my colleagues at South Bank would who focus more on the renewable side would say, the future is a lot closer than you think it is. We do have a question here from Aidan, who asks, any significance in Boaz being backlit by harsh energy-saving LED lighting, but John by a soft incandescence? Yeah, I must say, John, you're definitely beating me with the cozy lighting this evening. Sadly, at the current Airbnb I'm staying at, it's maybe not got the best light, but hopefully. Maybe there is some significance to this. Maybe I'm promoting the harsh energy-saving LED industry, whereas John here is much more in favor of the old school stuff. We do have a question on indeed on indeed what I'm drinking. Yes, this is indeed Guinness. Guinness Draft. It's not for everybody. I know some people feel very strongly about it. A question on whether or not I like Murphy's. No, sadly not. I think Guinness is much better than Murphy's. And Craft Stout. Yeah, it's some of it can be good, some of it can be bad, as is the case with craft anything really. We do have a question on oil in Kazakhstan. They have plenty just waiting to be drilled. Now, Kazakhstan, very interesting region for investors, John. Though it has very well. It would have a very unique political situation, which gets some people quite wary about it. A lot of people are interested in the uranium side of Kazakhstan, but of course, very strong oil industry. A lot of Aberdonians in Kazakhstan helping out with the oil industry there. Do you have any views on the Kazakhstan sort of situation?
Look, it's a huge country, and it's in the center of Asia, which the world's largest landmass, and basically it's therefore unbelievably resource rich. That said, it's also a long way from everywhere that wants those resources. And so yes, they've got tons of uranium, the world's largest reserves of uranium by far, actually, based on this is known reserves. You never know; you might find some somewhere else someday. But in terms of known proven uranium reserves, they have by far the biggest deposits. And then yes, they have oil, and they have all kinds of metals, rare earths, precious, you name it, right? I mean, all kinds of stuff, which has yet to be discovered. It's such a big place. People are out there exploring everywhere, and who knows what they're going to find. So if you simply believe that natural resources are going to remain in the bull market, that basic industries are undervalued vis-a-vis, tech and other more sexy stuff, then chances are you're going to be investing in companies that almost certainly will at least want to be getting into Kazakhstan and getting involved there if they're not already.
Yeah, it's interesting, very interesting country that people don't, we don't hear too much about when it comes to the investing landscape. But as you say, absolutely enormous, and all manner of natural resources out there, and so much of that is yet to be excavated. There's there's the promise of future discoveries there, which
Yeah.
I'm sure people will get very excited about in the future. We do have quite a few questions here. Uncommon Sense says we can't draw any conclusions about Venezuela while they are suffering under sanctions. Well, the comment as we were discussing earlier, we were talking about how the erosion of capital stock in a country can create even greater inflationary conditions. So when you allow your oil extraction equipment to go to pot because you're hiring loads and loads and loads of people to sort of pay them off to some degree. This is very bad for the economy, and it will make any inflationary pressure even worse, and it will make oil prices go even higher. It's something that we discussed last week a little bit, or I mentioned in last week's episode, John, regarding the question of whether sanctions on a country are what causes the big economic issues in a country, or whether or not it's socialistic policies by the governing rulers. There are plenty of folks like Uncommon Sense, indeed, who says that it's all about the trade sanctions, and that's what is causing the hyperinflationary environment, or what turns the government towards hyperinflationary policies. Would you have a comment on that?
Look, it is both, right? I think it is both. I think socialist policies are damaging, and I believe sanctions are damaging. Now, whether sanctions are damaging or not has a lot to do with the specific country in question, and to the extent that they rely on trade. Some countries are less export dependent than others, or import dependent for that matter. However, other factors equal, yes, of course, sanctions are going to hurt. And if you get into a situation where the sanctions are pretty universal, the way they have been on some countries, such as Iran, for example, they can be hugely, hugely damaging and contribute to high inflation as a result of that, because of the supply constraints, and yet the government continuing to throw money, at the problems, as it were. Venezuela is a little bit different in the sense that the U.S. imposes sanctions on them, but many Latin American countries don't agree with the policy, and so they still trade essentially freely with Venezuela. And there's not a whole lot the U.S. can do about that. But certainly, to the extent there are sanctions on Venezuela, I'm sure they contribute to the problem. I'm sure they do. But to say that that's 100% of it, and that it's not the underlying socialism which has caused huge problems for them through the years, I think is wrong too.
Yeah, there are some interesting exceptions to trade sanctions. So there are oil companies that do are still do still manage to get some work done in Venezuela. They've managed, because of course they've a lot of size and they've got lobbying power, that they've managed to get exceptions, and so the heavy sour crude that we were referring to can end up in the mix of the general North American fuel economy. But yeah, it is Venezuela, I think, is an interesting case. But you do always have the question of sanctions, which we did refer to in a previous episode. And how strong are sanctions? So we've got with the Russian situation, all of these threats of very, very damaging economic sanctions. Well, what is that actually? What do these sanctions really lead to? Does it depend on what the sanctions are targeting? Of course, it does. And yeah, on that note, actually, John, in terms of a current sort of update on the Russian situation, could you offer any comment there by any chance? Because a week is a long time in geopolitics, as the saying goes.
Well, it certainly is right now. I mean, there have been so many developments over the past week, it's hard to keep track of it. It seems to me that there are attempts to de-escalate taking place here, and there's also attempts to intermediate taking place here, and yet there's no evidence to me that any of them so far have been successful. It's nice to see people trying, and I think some people are really trying in good faith here to try and get both sides to see sense and try to lay the groundwork for some sort of deal. But so far, it doesn't appear to have worked. And when it comes to the situation on the ground, things are worse. There have been lots of weapons deliveries from the US and UK to Ukraine. Russia has said, don't do that. And they see that as de facto NATO support for Ukraine, which they've said it should not be allowed. And now, of course, we know that the Russian military is in war games with the Belarusian military, their close ally, just north of Kiev. Now, I mentioned this as a possibility weeks ago. I said, if they place a force there, that threatens Kiev. And that's a big escalation. Well, now they're actually on maneuvers. And maneuvers can turn into the real thing in an instant, which is one reason why maneuvers is seen as such a big provocation. When I was younger and I used to hear about military maneuvers being a provocation, I thought, oh, but they're just practicing.
Yeah.
But the fact is, you can literally turn the switch and the practice turns into a real operation almost immediately, hence why they're so provocative. So I think things are even worse now. The risk of a miscalculation is even higher now. The attempts to mediate haven't worked yet. And there are only so many attempts you can make before everyone's sort of tried everything. And then the real problem becomes timing. What Russia has built up now is expensive. Sending all those ships to the Black Sea in potential support of an amphibious assault is expensive. They can't stay there indefinitely. Some of the other measures they've taken on land really are not economic to sustain indefinitely. You can't remain on war maneuvers indefinitely. And the same's true of Ukraine and NATO. It's just, you can't just stay on battle alert indefinitely. It's too exhausting. It's too expensive. And of course, seasons change. And when you do get to the spring thaw in Central and Eastern Europe, other factors equal. It slows down the tanks. It slows down the artillery pieces. It slows down the troops. And if Russia does want to do a lightning strike to disable the Ukrainian military and render it, strongly degraded vis-a-vis the way it is now, they'll act before the big spring thaw. So they have a window of, I don't know, 6 to 8 weeks, maybe max, before they're absolutely going to have to do something or give up and lose and potentially lose face. So again, it's a scary situation now.
Macron is saying that Putin has an interest in cooling the situation and withdrawing. Do you think there's anything in that?
Well, I think Macron is trying to, again, he's making as much of an effort to intermediate here as anyone, it seems. I'm not sure it's worked, but I guess what he's trying to do is explain to both sides, look, the cost of doing this is so much greater than the benefits. And he's probably also saying behind closed doors, again, speculation on my part, he's probably also saying behind closed doors to Putin that Germany and France kind of see his point and will try to work on NATO to cool down on this largely US-backed idea that Ukraine should be allowed in someday. I suspect that is being offered behind closed doors as a possible way out of this, but that takes time. And on the other hand, I suspect Putin is telling Macron in Germany, saying, hey, look, NATO may have served its purpose, guys, and you got to ask yourself, to what extent does NATO now serve your specific national interests? It's your membership in NATO, which is getting in the way of access to Nord Stream 2 gas supplies. It's NATO, which is getting in the way, perhaps, of France always wanting a lot of military independence vis-a-vis the United States and Germany both. They always have. And I wonder whether Putin is also kind of and finding ways to try and work that angle of it, behind closed doors. And you know what? When the history books are written, hopefully we'll know and understand and learn from what's going on. But we may never know. Hard to know.
Yeah, it's one of the one of the great mysteries. I guess that's why people love discussing it so much, because there is an intractable element of it. You know, it's like a riddle that won't be solved. On the geopolitical side, John Cowperthwaite, possibly a pseudonym, says that, you know, here in the Cotswolds there are B-52s every now and then, a lovely sight and sound. So, you know, we've got some British fans of B-52 bombers here in the UK. It is very remarkable that B-52 is still flying, still part of the nuclear deterrent of the US. I think it was the 1950s when they were developed and became operational in the 1960s. Quite remarkable that they still get so much airtime, but very, very reliable piece of kit, a bit like Toyota Hiluxes of the sky, as it were. There's one side of the geopolitical story I thought we could dwell on this week. This was a story in the Financial Times. I think we've got a headline for it regarding ARM Holdings. And this was here we are. SoftBank's $66 billion sale of chip group ARM to nvidia collapses. Transaction had faced scrutiny from regulators and was opposed by rivals. Now, I find the story of ARM Holdings quite interesting. So maybe this what's hit the press is about the fact a sale is not gonna go ahead of this business. But if we wind wind the clock back to 2016, when Brexit was the thing that was just all over the news. It's almost nostalgic, you know, for when the newspapers would just talk about Brexit all the time. That was the headlines every single day, even in papers over in the States. And that, it was quite remarkable. And here we are, and here we are, and things are so much different, and it's all about COVID, etc., etc. But back in 2016, soon after the 2016 referendum, ARM Holdings got acquired by SoftBank, the Japanese investment bank, very big on their tech. And ARM Holdings, or ARM, is very big in the semiconductor space. So they're all about microchips. Though we don't call them microchips anymore, we call them semiconductors for a reason I don't actually know. I don't actually know why we do that, but they're semiconductors now. And this was spoken about in the press as this is a really bad side of Brexit. So Brexit has caused the pound to fall by a very large margin, and that has made the acquisition of one of Britain's crown jewels in the tech space really, really cheap. And SoftBank's managed to buy it up really, really fast. And here we are, and times have changed. We're several years later. We're in a different epoch. Everything feels quite different, and here we are, where SoftBank was trying to sell this, and it's not turned out with to nvidia, which is the other very large semiconductor business. Now, John, I was just wondering if we could speak a little bit about semiconductors and how they have become so geopolitically significant now. So everyone was talking about shortages of not just raw commodities and energy and things like that, but semiconductors over the past couple of years. Lockdowns did all manner of damage to the supply chain for those. And of course, they are geopolitically incredibly significant because so much of them are concentrated in Taiwan, which China wants to take back. And there are so many different angles to this because the technology is really, really key to so many military technologies, not to mention consumer electronics and things like that, which makes them very geopolitically significant. Yeah, could you give us a little brief on what the situation is and why investors especially should be paying attention to it, since tech is so much the name of the game for so many investors?
Well, look, I mean, semiconductors are to the tech industry what oil and gas are to manufacturing, right? It's the raw input. as it were. And that's the thing. I mean, what you asked a moment ago, what are semiconductors? Well, really, it's because they have this property of being able to conduct electricity or hold the charge and not allow it to flow any further, depending on precisely what impulse they're getting. And so basically it allows them to act like transistors. That is, they either allow the charge through or they don't allow it through.
Yeah.
And that allows them to act as a 0 or 1 and hold a bit of information, right? And then of course processors, perform these calculations using a huge mass of these, microchips and whatnot. But that's the idea. And so they're the absolute rawest of the raw input, as it were, into tech as we know it today. And yes, as you say, that industry has consolidated through the years, and is just because of the fact that Taiwan made a strategic decision years ago that they wanted to offer all kinds of incentives for semiconductor investment in Taiwan. And they've been very successful at that. But I forget exactly what the number is now, but something like 70 or 80% of global semiconductor capacity is in Taiwan. I mean, is that about right? It's a huge number. And it almost boggles the mind that this large island off the coast of China is that dominant.
Yeah.
And yet, so here you are, right? Taiwan is, I mean, one hopes it doesn't happen perhaps, but Taiwan is potentially involved in what could be an aggressive move by China at some point to reclaim the lost wayward province, whatever they tend to refer to it as. And then, as you also say, most recently, COVID has hugely disrupted semiconductor production. And as with so many essential commodities, again, I'm lumping semiconductors in now to essential commodities generally. As with so many essential commodities, maybe there's just not enough capacity out there. If we live in a world of disruptions, supply chain disruptions, we need more capacity. We need more logistical flexibility. We don't want to source everything from just one place. We need security of supply, and other factors equal. More diversification provides more security. And of course, one of the best forms of diversification in this instance is having a factory down the road, right? And so you can imagine many countries that want to have active and vibrant tech sectors might consider their own local subsidies for new semiconductor production capacity. And the UK may well fall into that group.
That's interesting. It's interesting edge to the whole situation. How was it that so much of semiconductor manufacture ended up in Taiwan, and the story behind that? John, could you give a bit of context to that? Because it is interesting that semiconductors have been an industry for a very long time, and of course, through globalization, it is possible to set up manufacturing in plenty of different countries. Why is it that so much of it has stayed in Taiwan? Is that because of how sensitive some of the manufacturing of these things are?
Keep in mind, there is a fundamental principle of economics that you get clustering of industries, and that's because the capital structure, the specific capital structure you need, the labor force you need, when you get into an economy of scale, and semi-manufacturing is an economy of scale, it helps to have these clusters. And Taiwan, I believe, noticed that it was a natural place for a cluster like that to form. But then I think the government decided, well, hey, we're going to really go for market share. We're really going to try to become the most dominant global player in this. So they took what was maybe a naturally occurring cluster of semiconductor capacity anyway, and tried to build it up above and beyond what it perhaps would have been built up, or to the extent it would have been built up, had they not encouraged it, subsidized it, done it in a very deregulated way that attracted firms from countries where perhaps the regulatory red tape for new semiconductor factories was somewhat higher. And I guess that just went on and on for years and years. And then you end up in this sort of situation, which does appear very extreme. And I can't imagine, again, as I mentioned, that multiple countries, perhaps including the UK, are going to make an effort now to rebuild some domestic capacity.
The sensitivity of having so much of semiconductor supply in Taiwan, and with China wanting to reacquire it. Robin asks, if China takes Taiwan, they control the semiconductor supply from there. I expected the UK government would have resisted the sale of ARM, as it is so crucial. Though, of course, it was being sold to SoftBank. But, it was going outside of the UK's influence. Ultimately, it was outside of the UK's domain. On that note, John, when you think of the risk of China taking Taiwan, something we've discussed on several episodes of South Bank Live in the past, what do you think would be the direct effect on the semiconductor industry? Because if there is so much concentration of semiconductor supply, I think it's very hard to imagine the level of knock-on effects that there could be if that got deliberately restricted, even just to certain countries, as a result of the CCP controlling it.
Look, absolutely. And again, this is one of those things that we know the risk is there. There's no way to quantify it. It's a qualitative risk, but we just know the risk is there. And keep in mind, I've been negative big tech for a long time. And the fact is that big tech does have, I believe, more. They're not just overvalued. I believe they probably have multiple Achilles heels in terms of their valuations. It has a lot to do with the way they account for intangibles on their balance sheets, how much their IP is really worth longer term, how much their brand recognition is really worth longer term. I have loads of question marks. But one of them is actually much more basic than that. And it is this. The fact is that what happens to big tech if one of their essential supply inputs is compromised due to God knows what dispute, trade war, actual war, whatever it is? And I'm not sure anyone really takes that sort of risk into account. They think, oh, gee, this is tech. It doesn't depend on material inputs. That is so not true. It does. They may be a small part of the value add chain, but they're essential parts of the value add chain. And if you can't source those inputs, then you sit around idling your factories the same way I believe Ford is now idling factories in the Detroit area because of the closing of the border between Detroit and Canada.
Right.
And they can't get essential parts. And so anyway, what happens if that happens to tech? It's still very real, and it is a risk, right? It's very, very expensive to have a factory that you're financing and trying to run as efficiently as possible, and suddenly not having any input. What do you do? It increases your cost of doing business. It reduces your profit margins, and financial markets need to price in the risk that something like this might happen with semiconductors or possibly other inputs into big tech.
Yeah, it's certainly something to keep very, very aware of, because even outside of the investing world, I mean, semiconductors power so much. I mean, this very conversation would not be possible without an awful lot of semiconductors. And while we could just carry on doing these with the existing tech, there are certain things when it comes to interoperability of old operating systems with new tech, things don't work out quite so much. And if the Chinese Communist Party did manage to dominate semiconductors so much, and we got semiconductor rationing, like we're getting energy rationing with those that we could get, all manner of very, very strange results, which people probably haven't expected because they just thought that globalization was here to stay. Now, John, on the we have been going over time now. It is now 2 minutes past 8 at the currently. I thought we could just end quickly with our long and our short for the week. Could you enlighten us with your long and short? Of course, this is not in the context of giving financial advice. This is for entertainment purposes only. For anybody who is new to the show, this is simply where we look at two investment themes or other phenomena. Could be behaviors or just news items that make you bullish or bearish on certain factors. John,
Well,
could
I'm
you
going to
kick
mention
us off?
things. Yeah, sure. I'm going to mention things I've mentioned before, and indeed mentioned before just now. I still think that big tech is a short here. Again, we've seen some things stumbling now. Facebook's taken a recent hit. I think it might be breaking down a bit, and we're going to see a major material revaluation and reassessment of the outlook for big tech here. So I would still be short there. Again, the sector is struggling a bit, but I think it's got a lot of potential downside from the starting point. That's the short. And the long, I'm going to circle back to precious metals. I mean, look at the CPI print we're getting from the US. Look at the fact that central banks are miles behind the curve. Gold has not been trading as well as it should be. I am surprised by that. It looks increasingly curious. We've had also some fresh reports of multiple central banks buying a lot of new gold reserves recently, taking advantage of this $1,800 per ounce area. my confidence is growing that that's putting in a strong floor. And of course, other factors equal. If traders sense there's a strong floor at a given level, they're more inclined to speculate to the upside and rebuild long positions for where we might be going in future. And I think where we're going in future is increasingly clear that inflation is not transitory. Central banks aren't serious about doing anything about it now. Governments are going to keep spending money to fund their pensions and whatever else is happening. All the macroeconomic environment remains as gold positive as it ever was coming out of the COVID lockdowns. And I think that we're going to see a major catch up in the gold price to the macroeconomic reality over the coming weeks and months.
Certainly a factor to be watching, and I'm sure we'll return to it in future episodes of South Bank Live, John. Precious metals, a very interesting moment for them because you got central banks hiking rates while you get these incredible inflation statistics coming out of the US and here in the UK. I think I've just got a long for this week. That would be Scotland. I'm long Scotland. Following our glorious triumph over England earlier in the week, I must say I felt very alone in the pub here in Derbyshire supporting England. My own girlfriend was very alone supporting Scotland. My own girlfriend was supporting England, and I was the only one who was happy at the result. So I'm long Scotland going into the game with Wales on Saturday.
Maybe you're buying at the top, Boaz.
Maybe I am. We'll see next week. But it was a very good game. And Liam says you hit 179 watching, a new record. Thank you to all who have tuned in this evening. It is great to have these live shows. I hope everybody enjoyed it. And I'm sorry if we didn't manage to address your question. We'll hopefully be able to get some more of those in the next episode. John Capithwaite again. Get Boaz a 4-pack and we can go for 300 in the next hour. Well, John, I'm afraid it will have to wait. The next episode of South Bank Live won't be with John, though John, of course, will be back. I think next week we're going to try and get Nick Hubble from Japan. We haven't spoken to Nick Hubble for a very long period of time. Because of the crazy time difference, I'm afraid it won't be in the evening. It will be earlier on in the day. We're still negotiating what would be the best time of the day for that, but hopefully we can figure something out. That's all for the moment, folks. Thank you so much for tuning in. It's been a very enjoyable watch. And it's been very enjoyable, discussing all of these topics and listening to all of the great comments we've got in the chat. That's all for the moment. But John, thanks so much for thanks so much for joining me, and thank you all so much for watching.